I tested this new technical indicator for a day trading strategy, and the results really shocked me. First step, we're going to add the technical indicator that we'll be using for this strategy. You add this one. We're going to go into the settings and make a few changes. Here, you can leave it as it is. Here, we're going to write 25. Here, we write 1.4. Here, we delete it, write 49, and then confirm. I'm on a 15-minute time frame on the euro dollar, and basically this technical indicator will give you your buy and sell signals. I'm going to give you some live examples so that you can understand the strategy perfectly. You can see that the technical indicator has just given us a buy signal right here. It's interesting because the candle giving the signal is this bullish Marubozu, and you can see it's coming back up to the level of the start of this bearish impulse candle. When the indicator gives you the buy signal, it absolutely must be on a bullish candle, otherwise you don't take the trade. At the close of this signal on the 15-minute time frame, we can buy. We have the entry price right here. The stop loss, you put it under the impulse candle, and we're aiming for a risk reward of 2 times. I'll let the Japanese candlesticks play out and wait for either the stop loss or the target. You can see that the market has just reached its target right here. That's a nice first trade, and to prove to you it's not just luck, we'll follow the next 4 to 5 signals from the technical indicator. We can see that the technical indicator is giving us a sell signal. It's true that the candle looks great. You can see that the market left a long wick behind it with no wick at the bottom. It's really a bearish impulse candle that shows a signal of selling strength and also demonstrates that the market isn't ready to break above this price zone. So you have a strong resistance right here. You can confidently sell the market at the close of the bearish candle right here. You put the stop loss just above the wick. And just like before, we're looking for a risk reward of 2 times. We'll let the Japanese candlesticks play out. And we see that the target has just been reached for the 2nd time in a row. That's an excellent trade. You can see that the market went straight south. And a few hours later, in day trading, you have your target. I'll let the Japanese candlesticks play out and wait for the next signal. We can see that we have the 3rd signal given by the technical indicator right here. A buy signal on this bullish candle on the 15-minute time frame. We buy at the close of the candle, we put the stop loss under the 15-minute wicks here, and a risk reward of 2 times as before. You can see that the 3rd trade is a success. The market has just reached the target. I'll let the Japanese candlesticks play out, and we'll wait for a 4th signal from the technical indicator to test it. We can see that we have a great signal right here. It's precisely this 15-minute candle that's giving the signal. This signal is interesting because we've just broken a bullish trend line to the downside, and you can see that following that, the market drops a bit, and the technical indicator gives a sell signal. Entry price at the candle's close. We'll set the stop loss just above the wicks and a risk reward of 2. So you see that the market, 1 hour after taking the sell, hits the target here. We let the market run and wait for the next signal. We can see this beautiful bullish signal here with a huge 15-minute bullish candle. This candle clearly breaks the bearish trend that had been in place since the sell signal. And even though it's a large candle, we have no choice but to wait for its close to buy. We place the stop loss just below the bullish impulse candle. And as before, we're looking for a risk reward of 2. First step, we're going to add the technical indicator that we'll use for this scalping strategy. Add this one, and before we start, let's go into the settings to make a few changes. We'll uncheck these 3 boxes because we only want to keep the strongest signals from the technical indicator. Finally, you can remove this and then we'll confirm. You have a technical indicator that will give you very strong buy and sell signals. I'm on forex with a 5-minute time frame, and I'm going to show you live how to use this indicator in this very effective scalping strategy. You can see a first sell signal from the technical indicator. The first rule to follow for this strategy is that when the technical indicator gives a sell signal, the candle giving the signal must be bearish. The second very important rule is that you must wait for the candle given the signal to close before buying or selling. Here, we're taking a short position at the level of this candle. We set the stop loss above the previous high and look for a risk-reward ratio of 1.7. Then we stay patient until the market hits either the target or the stop loss. We can see together that the market has just reached the target. And I'll let the candlesticks run until the indicator's next signal. I'll take this moment to ask you to subscribe to the channel. You like discovering strategies? I release one video a day on new trading strategies. Second signal given by the technical indicator, and it's easy to see that the market has just detected a resistance zone here. The price action is very interesting because you see the market rejected this resistance with a bearish engulfing pattern. This is a signal I particularly like, especially in very important price zones. The signal was bearish, the candle was bearish. The first rule is validated. We wait for this candle to close before selling, and we enter here with a stop loss above the previous high in the resistance zone. And once again, we're looking for a risk-reward ratio of 1.7 for our target. Then we stay patient until the market hits the target or the stop loss. Patience is the most important quality for a profitable trader. Sometimes the market will give you your targets quickly, and sometimes it will take a bit more time. We can see that the market has just hit the target. That's a second consecutive successful trade by the technical indicator. I'll let the market run and we'll wait for the next signal from the technical indicator to enter a position. The market here is just given a buy signal. The chart pattern is very interesting. Look, you have a bearish consolidation following the previous trade, and very easily we can see back and forth movements between two price zones with lower and lower highs and lower lows as well, which is the definition of a downtrend. Until the moment where here, the market doesn't make a new low, and it even makes a new high that's higher than the previous high. We wait for it to close, and then we can enter a long position. Stop loss here, and we're looking for a risk reward of 1.7. I turned $56 into $2,500 in just one day of trading. And in this video, I'm sharing my entire scalping strategy with you. You need two indicators. The first one is the exponential moving average. Go into the settings and change 9 to 20 because we use the 20-period moving average for this strategy. I use it in yellow. Remove the price and confirm. Second indicator, the RSI. Go into the settings and select 21 periods. Some people use 7 periods, some use 14 periods. With 21 periods, I assure you is much more effective, especially for the strategy I'm sharing with you today. Your indicators are ready. All that's left is to use price action, meaning Japanese candlesticks. I'm going to explain everything to you. You can see that we have the start of the trading session here. The end is here. All of this happens in a single day. During this uptrend, I turned $56 into $2,500. I'm going to teach you how to do the same thing. All right, let's get started and dive into the heart of the strategy. You can see that there was a huge downward move, and after that, the market set up an accumulation pattern. And the closer we get to the end of this pattern, the more interesting it gets, because the market will either break out to the upside or continue its trend. Here, we can see that the market lows are getting higher and higher. That's a rather bullish signal. When the market forms a low, the next one is higher than the previous low. Next, you can see that this yellow 20-period moving average is broken to the upside by this candle. Second, rather bullish signal. And the third signal comes in here when the 50% zone of the RSI is finally broken to the upside. You can see that previously, during the downtrend, during the accumulation phase, the price was below the 50% zone of the RSI, and finally it decided to move back above it. Overall, this is a bullish signal because when the market is in an uptrend, it stays above the 50% zone of the RSI. And the last signal that made me take my first trade to ride this whole trend was the breakout here of the accumulation pattern. Bullish breakout, I don't hesitate. I have all my signals and I make my first buy here. We set the stop loss just below the last 5-minute candle. For my first target,
I'm aiming for this previous market high, which forms a small resistance on the 5-minute chart. I figure the market is very likely to stall at this price zone, and it's really good for your trading capital to manage your trades this way. You can see that the market will reach its target, which is roughly around here. So that's a first winning trade, a professional trade, a safe trade. Then you see that after this rise, the market makes a correction and even breaks below the 20-period moving average here. That's a bearish signal. It's definitely a bad sign for buyers. So I'm not going to do anything. I'm not going to keep buying. I took my profits here. So now I wait. You can also see here that the RSI drops back below the 50 zone. That's a second signal telling me I need to be patient and let the market do its thing. And actually, you'll see that during this whole period, inside the green rectangle, the market will move sideways. It'll hover around the moving average. Around the 20th, it'll move around here near the 50% zone of the RSI, but without ever making any real decisions. So this is a period where you do nothing, and with patience, finally comes a bullish candle. Right here, you can see it. It's going to break back above the 20-period moving average strongly. The RSI here is also going to move up sharply. It's going to move away from the 50% zone. So we have an excellent signal because with this candle, we're also going to break through the previous high, which was right here. That high had formed a small correction and we expected that when the market came back to it, there would be some resistance. But here, there's no resistance at all. The market just shot right through it to the upside. That's a very strong buy signal. So I don't hesitate and I take my second trade. Entry price, stop loss. We'll set it here around the 20-period moving average. And for the target, we'll aim for about this previous zone. We'll place our target roughly in this area. And here you can see we have a risk-reward ratio of about 1.8, almost 2. So that's excellent. We're more than happy to take this trade. We go long, and as you can see, 10 or 15 minutes later, the market easily hits our target. Let's keep going. I'll explain the next trades to you. You can see that, as usual, after a rise, there's always a little downward move. It breaks below the 20-period moving average again. The RSI here also dips a bit lower. So after taking profits, here, just like before, we wade through this whole area. We just wait and do nothing. And when the market forms its bottom, we let the Japanese candlesticks play out and wait for it to break above the 20-period moving average here again. Once it breaks above the 20-period moving average, once we get back above the 50% level on the RSI here, we can buy again. That's another buy trade with the entry price set. We set the stop loss just below the previous low, the previous one. And for the first target, we'll aim for this wick here. And you can see that the market will hit our target here without ever threatening our stop loss. You see, the market doesn't even come close to threatening the entry price. So this is an excellent trade, a safe trade, a trade that's supported by the 20-period moving average. After taking profit, we wait. You can see that the market is generally bullish, but there aren't any big impulsive candles either. And it's a pretty calm uptrend. What I did next was wait for new highs. So you have a new high here, which is higher than the previous high. And actually, once I see this pullback here, I see there's a strong bounce off the 20-period moving average. And I see that here on this 5-minute candle, we're about to break through. So this little resistance, this previous high, same thing, it's a buy signal. Knowing that the market is still bullish, I'm feeling confident. I wait for the 5-minute candle to close and I place my new trade here. The stop loss, we'll set it at the level of the 20-period moving average. And we're going to aim for a risk-reward ratio of 1.8 to 2 times. Here we have a risk-reward ratio of 2 to 1. And once you're in position, you just wait. You let the market do its thing and you can see here it's going to hit the target. The last trade is right here. You can see the market is going to come and test it. The 20-period moving average, but still well above the 50% zone of the RSI. And actually, when the market gives this bullish impulse candle, I'm going to take another buy at the close because I figure the momentum is still there and we've been in a strong uptrend for a while now. So I'll take one last trade here, again aiming for a 2 to 1 risk reward. You can see that once again it hits the target here. That's how, with just a simple moving average, a basic RSI, and a good reading of Japanese candlesticks, you can have a very effective scalping strategy. When a trend starts to form in the markets, it's important to follow it. It's important to know when to buy, where to set your stop loss, where to set your targets, and how to read the charts. And you can see that it works really well. You can turn $50 into $2,500 without any problem, with a good strategy and a solid understanding of price action.
Before I share this strategy for small trading accounts, we're going to set up the technical indicator we'll use for it together. Select this one. Next, we go into the indicator settings to modify this box. Delete 1200 and type in 1155. Don't touch the other boxes, and we can also change the thickness of the moving average for better visibility. We can delete that and confirm. This technical indicator will give you buy and sell signals for scalping. I'm on a 5-minute time frame on gold, and we're going to look at the details of this strategy together now. I'll let the candlesticks run until the indicator gives us a buy or sell signal. You can see here the technical indicator is giving us a sell signal. With this red zone and this little red triangle here, the indicator estimates that at the close of this 5-minute candle on gold, it's better to sell. You also see the moving average in blue. And the first important point for this strategy is that when the indicator gives you a signal, that signal must break the moving average. The candlestick must break the moving average to the downside. That's the case here, so we can take a sell position. We always wait for candle closes to buy or sell. We put the stop loss just above the wick because we estimate that if the market returns above this wick, it could potentially continue its minor uptrend. For the target, you aim for a risk reward of 1.5. That gives us a target here, and you see the market hit the target just 15 minutes after your sell. We let the candlesticks run and wait for the next trade. We can see here that the indicator gives a buy signal. The problem with this buy signal is that while the candle giving the signal is indeed bullish, so the candle goes in the direction of the signal, however, you see that the candle doesn't clearly break the blue moving average to the upside. You really need a clean break to be able to take the trade, so I decide not to follow this trade and simply wait for the next signal. And we can see that the market very quickly after gives an opposite signal, a sell signal. Yeah, you can clearly see that after this candle giving the buy signal, the market hesitates. We have dojis, hammers, and in fact it's a small range. So we were right not to follow the signal because here you see we would have hit the stop loss. However, this signal is very interesting because as you see, the candle giving the signal is bearish and also very impulsive. It strongly breaks the moving average to the downside. There's no hesitation, so we take a sell position. We put the stop loss just above the wick of the candle given the signal because we estimate that if the market breaks back above this small resistance zone, well, it's to go higher. And for the target, a risk reward of 1.5 as before. We wait until the market gives us either the stop loss or the target. We see that the market hit the target here. We wait until the next signal from the technical indicator. You can see that the indicator just gave a buy signal right here. Very interesting setup because you see that the candle given the buy signal is actually already well above the moving average. The breakout occurred on the previous 5-minute candle. The trade is very easy to take here because you can clearly see that in terms of price action, the market is breaking its bearish trend line to the upside. And so here with the bearish trend line breakout and the moving average breakout to the upside, you have excellent bullish price action. So you wait for the close of the candle that gives the signal. You place the stop loss right at the wick of the previous candle, and we look for a risk reward of 1.5 as usual. Here, once again, the target is reached by the market. This indicator is really effective because it's based on very basic concepts of technical analysis and price action. The indicator monitors momentum and gives you the best time to enter a position. We wait until the next trade. You can see that the technical indicator has given us a sell signal. Right here, we indeed have a bearish candle on the sell signal. Then, for the second step, you see that the bearish candle strongly breaks the moving average to the downside. Both criteria are met to take this trade. So, as you've understood by now, we wait for the close of the signal candle, entry price here, stop loss just above the wick here, and a risk reward of 1.5 as before. You see that very quickly, 10 minutes later, the market reaches its target. First step, we're going to add the indicators we'll use for this scalping strategy. The first one, you select this one. We go into the settings and we'll make a few changes. We delete that. We can delete that too, and we confirm. This technical indicator will give you sell signals, and it will also give you buy signals. Next, we add the second indicator, which will serve as confirmation for the trades. The RSI is added. We're going to go into the settings. You'll see that I use it differently. I don't use a 14 period, but a 21 period. You can also delete that. Here, I like to change the color, put it in white so it's more visible, and we'll make the 50% RSI line more visible on the chart as well. You'll see, we're going to use it for the scalping strategy I'm showing you in this video. You have your two technical indicators on the chart. When the technical indicator gives a sell position, here, for example, I'll check that the market on the RSI is below the 50% zone, which means the market is bearish. If the technical indicator gives a sell signal and the market on the RSI is above the 50% line, I won't take the trade. Conversely, if the technical indicator gives a buy signal, as is the case here, but the market is below the 50% zone on the RSI, I don't take this trade. I'm on gold in the 5-minute time frame, and I'm going to show you some live trade examples. We'll let the candlestick scroll until the indicator gives us a signal. You see here, the technical indicator gives a buy signal. We see that the market was bearish, that the red zone crossed to become a green zone. We have the buy signal, and you can see that on the RSI, we're breaking the 50% zone. The market was bearish, so on the RSI, it was below the 50% zone. And we can see that when the signal is given, when the market gives a bullish price action, the RSI is breaking its 50% zone. So it's validated on both indicators. We can take this buy with confidence. We'll wait for the close of the candle that gives the signal. So that gives an entry price here. You put your stop loss at the level of the buy signal, and for the target, we aim for a risk reward of 1.5 to be profitable. Let's see if the technical indicator was right to give us this buy signal. Once the trade is taken, we wait for the market to go either to the target or the stop loss. We can see that the target has just been reached. We let the candlestick scroll to wait for the second trade. We can see that the market is giving us a sell signal. You see that the zone was green because the market was bullish. Here we have the little crossover and the zone turns red. On the RSI, we can also see that it's breaking the 50% zone to the downside. The market was previously bullish, so you see it on the RSI, prices were above 50. So we have all the signals and criteria met to take this sale with confidence. The candle that gives the signal is this doji. So we have the entry price here. We set the stop loss at the signal level, at the previous highs here. And as before, we look for a risk reward of 1.5. The trade is placed, we let the market run, we stay patient as always and wait for the market to hit either the target or the stop loss. You see here that the market has reached our target. So that's a second successful trade with this technical indicator, which, as you can see, quite effective. We let the candlesticks run until the next signal from the indicator, buy signal given by the technical indicator. We can see the red zone crossing over to become green. We can see on the RSI below that we briefly broke the 50% yellow zone. So the criteria are met to take this trade. The candle given the signal is this nice 5-minute impulsive candle. We wait for the close as always. Entry price. We set the stop loss at the indicator's buy signal level and at the low point here. And we look for a risk reward of 1.5 as before. We'll see if the technical indicator was right a third time in a row. We stay patient, we wait for the stop loss or the target. The target was reached by the market a third time in a row. I'll let the candlesticks run to see the next signal from the technical indicator. We can see here very quickly that after the target, the market gives us a sell. And when the market gives us the sell, you can see on the RSI, we have a small break. So we're moving below the 50% zone. Even if the market here goes slightly back above, at the moment, you have the technical indicator signal, where you have the bearish candle here, the RSI is breaking. So we take the sell precisely here. We set the stop loss above this small wick here, and risk reward of 1.5 as before. Then we stay patient and wait to see if the market reaches the target. You see that the market has shifted sharply downwards, and so the target was very easily reached here. First step, we're going to add the technical indicator we'll use for this scalping strategy. You select this technical indicator. For this scalping strategy, you only need this technical indicator and price action. You can see that overall it's going to give you buy signals and sell signals. We'll use price action to confirm the signals the indicator gives us and to decide whether to take the trade or not. I'm going to let the candlesticks run until the technical indicator gives us a signal. You can see here we have a first buy signal, and what's interesting is that the buy is given after a nice bullish candle that engulfs the previous candle. We had a sort of hammer here. Then you see this 5-minute bullish candle engulfs the body of the previous candle. So it's a great buy signal. When you see that, you can trust the signal given by the indicator. Preferably, I'll look to confirm the signals with engulfing patterns. We wait for the candlestick to close. We buy here, set the stop loss at the level of the lower wicks, and look for a 2-to-1 risk-reward ratio. The market has reached our target. We'll continue, and we can see that the indicator gives us a second buy signal here. You see that the buy signal, once again, is given with a magnificent bullish Morobozu engulfing candle. Very powerful buy signal. You can trust the indicator because the price action is moving in the same direction. We enter at the close of this bullish impulsive candle, set the stop loss just below, and once again, aim for a 2-to-1 risk-reward ratio. Let's see if the technical indicator was right again. We can see that the target was reached here. You can see that the technical indicator gave you a second buy signal. That would have been a wonderful opportunity to strengthen your long position, meaning adding a second buy. Let's let the market run to wait for the next trade. I'm giving you live examples so you can clearly understand how to use this technical indicator. We can see that the market has given us a buy signal. And once again, as you can see, the bullish candle given the buy signal completely engulfs the previous bearish candle. It's a great buy signal. A bearish trend line was holding the market down, meaning as soon as the market rose back to the trend line, it was rejected downwards until this impulsive bullish breakout candle reversed the market and resumed the previous uptrend. In fact, that was only a correction within the previous uptrend. The market is resuming its uptrend. We buy at the close of the bullish breakout candle and set the stop loss just below the candle. It's a very tight stop loss, but I believe that if the market re-enters the bearish trend line and goes back below it, it'll be a very negative signal for the trade. So I prefer to have a very short stop loss. And for the target, we're looking for a 2-to-1 risk-reward ratio. You see that the target is reached very quickly after that. Let's test the next signal from the technical indicator. We'll let the Japanese candlesticks play out. We can see that it's suggesting a buy once again. You see, the technical indicator is quite smart because it managed to identify that we were in a strong uptrend, so it's only going to suggest buys with very precise entry points and great timing for an excellent risk-reward ratio. We can see that the candle given the signal is this one. This bullish candle is a signal we're validating based on price action. So we buy at the close. We place the stop loss under the last wick here and aim for a 2-to-1 risk-reward ratio. The trade is placed, we let the candlesticks move, and you see that the technical indicator is right once again. The target has been reached. That's already 4 consecutive winning trades, thanks to this technical indicator with a 2-to-1 risk-reward ratio. So you really have professional risk management and trade management here. Bearish signal here from the technical indicator. We're going to take the short, even though we don't have, as you see here, the bearish engulfing candle, which is the perfect signal. But you still see a market rejection with 2 wicks and a bearish candle giving the signal here. So we sell exactly at the close of the 5-minute candlestick. We always wait for the close to sell or buy, because until the candle is closed, it can transform and take a different shape. So it's important to always wait for the candle closes to include them in your technical analysis. 2-to-1 risk reward, as usual. For example, if you risk $50 on the stop loss, it's to gain $100 on your target. You only need to win 50% of your trades to be a profitable trader. I'll let the candlesticks play out, and we can see the market came close to the stop loss, but we're still in the trade. We can see the indicator is given a signal opposite to our short position here. Even if the market hits the stop loss, we've won 4 trades in a row so far, thanks to the technical indicator. The market here, as you can see, is given 2 more sell signals. It's also given a buy signal.
The short trade taken here is still active. The market still hasn't hit the stop loss. And you see that here. The market just hit our stop loss. It's okay. We almost reached the target here. You see, the market was hesitating. In the end, it's arranged. Out of 5 consecutive trades, we were right 4 times. With a 2-to-1 risk-reward ratio, you're well into profit on your trading account. For this highly profitable scalping strategy, you need 2 technical indicators. The first indicator is this one. Go into the settings and change 55 to 59. Next, we'll improve the visibility of the Bollinger Bands and confirm. Your main technical indicator for this scalping strategy is now set up. Next, we'll use the RSI to confirm our setup. And for this RSI, in the settings, set it to 21 periods. Not 7, not 14, but exactly 21. Set it to 21 so the RSI is highly effective. This setting helps avoid false signals. This technical indicator will give you very precise buy prices and very precise sell prices. You'll see, it's very effective. Right now, I'm on the 5-minute time frame for Bitcoin. This strategy works on all charts. You can apply it to all your financial markets. We're going to let the market run to find our next trade using this technical indicator. And don't forget, we're also going to use the RSI. You can see here that the technical indicator is suggesting a buy. To confirm this buy, we need the market to be above the 50% line or the RSI, shown in yellow. You can see here that when the technical indicator suggests a buy, the RSI is well above 50%. So from the RSI's perspective, it's validated. You enter a buy position at the breakout of the upper Bollinger Band. At the close of the 5-minute candle here, you set your stop loss at the middle line, and we're aiming for a 2-to-1 risk-reward ratio. There you go, the trade is set up. The entry price, the stop loss, the target. Let's see what the market does. We can see that the trade went well. We just made some money. Now, we'll wait for the next trade. We let the market do its thing as long as the technical indicator doesn't give a buy or sell signal. You can see here that the technical indicator is given a sell signal. You get it. We enter a sell trade when the candle breaks through the Bollinger Band. So here, we set the stop loss above the middle line and place the target. You can see that the market hit your target. That's a second winning trade in a row. You just made a profit once on a buy here and once on a sell here. You can see that in the meantime, the technical indicator didn't give any other signals. So during this whole period, you do absolutely nothing. You wait for the technical indicator to give you a signal, like here for a sell. We are going to wait for our next trade. You just have to wait until the technical indicator gives you a buy or sell price. For now, we wait. We let the candles play out. And now, we've just gotten a buy signal from the technical indicator. We buy when the market breaks through the Bollinger Band. Entry price, we set the stop loss below the middle line and place the target. Let's see what the market does. You can see here, the market just hit the stop loss. That's a failure. This indicator can be wrong too, and that's okay. We're going to wait for the next trade. So far, we have 2 very profitable trades and 1 small losing trade. Let's let the Japanese candlesticks play out. You can see that the market is about to give a sell signal here. We sell when the market breaks through the Bollinger Band. As usual, we set the stop loss at the middle line of the technical indicator and aim for a 2-to-1 risk-reward ratio. You can see that the market hit the target. That's a huge bearish candlestick. So you have a 4th winning trade. Let's wait for the next trade. You stay patient, you let the market do its thing until the technical indicator gives you a signal. You can see it here, a buy signal from the technical indicator. You're starting to get it now. You buy on the breakout. So on this candlestick right here, you set the stop loss, same as always, at the middle line, and you aim for a 2-to-1 risk-reward ratio. You can see that the market actually hit your target very, very quickly. If you buy at the close of the 5-minute candle here that breaks through the opposite Bollinger Band, you'll see that after that it's 5 minutes, 10 minutes, 15 minutes, and then at the 20th and 25th minute, the market hits your target. That's a 5th trade. You have 4 trades that hit the target and only 1 trade that didn't work out. So you're well in profit. You made quite a bit of money just by blindly following this technical indicator. First step, we add the technical indicator that we'll use for this scalping strategy. Type it in and you can select this one. Go into the settings, keep 70 in this box and confirm. You have the zero lag technical indicator that gives you buy and sell signals. The signals are very interesting, very effective, and I'm going to teach you how to trade them as simply as possible in this video. You see that here? We have a sell signal on the euro dollar in a 5-minute time frame. Look at what happens next. Overall, this indicator will give you sell signals and buy signals. You can see that you have a green zone and a red zone. Simply put, when the market is rather bullish, the zone will be green. When the market is rather bearish, the zone will be red. And when the indicator thinks it's good to buy or sell, it gives you a precise signal that you can follow. The only rules to follow to track the signal are that the zone must change color. The baseline must change color as well. And the candlestick must be bearish if the signal is bearish, or bullish if the signal is bullish. I'm on the gold chart in a 5-minute time frame. I'm going to show you live how to properly use this very effective indicator. You see that the zero lag indicator just gave a bearish signal. The green zone becomes a red zone. The green baseline becomes a red baseline. And a third condition, when the signal is given, the candle is bearish. So the candle is in the same direction as the signal. When you see that, you sell at the close of the bearish candle that gives the signal. Right here, you set your stop loss at the top of the zero lag zone, and you aim for a risk reward of 1.5 or 2 times. We'll let the market do its thing to see if the indicator was right. So that's a first successful trade. We let the candlestick scroll, and we see that right after, the zero lag indicator gives us a buy signal this time. We can see that the baseline goes from red to green. We can see that the red zone turns into a green zone. And the candle giving the signal is, as you can see, very slightly bullish. But we can take the trade since it's validated. It's not a red candle, so we buy at the close of this 5-minute candle. We set the stop loss at the green zone and look for a risk reward at 2 times. Let's see if we were right to take this buy. And you see that the market has just reached its target. We had to be a little patient. The market was making small candlesticks, but you see that the stop loss was never threatened. The entry price very quickly moved into profit. You just had to be patient for maybe an hour, hour and a half. So that's a second consecutive successful trade by the zero lag technical indicator. You're starting to see that it's simple to use, but incredibly effective. We'll let the candlesticks play out to look for the next trade. We're being patient, and we see a sell signal right here, given by the indicator. You're starting to get the 3 conditions that need to be met. So you have the green zone turning into a red zone, which is a selling zone. You have the signal given here with a red candle, so it's validated. And you also have the baseline switching from green to red. All 3 conditions are met. We'll sell the market at the close of the red candle that gives the signal. Stop loss, as usual, at the top of the red zone, and a risk reward of 2. A 2-to-1 risk reward is great because you might risk $50 to make $100. So even if you lose 2 or 3 trades in a row, with a few winners, you're still profitable. In fact, you only need to win 40 to 50% of your trades to be profitable. The third trade is placed. Let's see if we were right to follow this technical indicator once again. I'll extend the zone and we'll stay patient. Patience is the most important quality for a trader. We can see that the market hit the target for the 3rd time in a row. It took some patience, but you see the price action of a bearish market at work here. And so this indicator is actually quite smart. We'll let the candlesticks play out, and we see that the indicator gives us a 4th trade. We can see the red zone turning into a green zone. The signal is given here. The candle is bullish, so it's validated. And also, the red baseline is turning into a green baseline.
We buy at the close of the bullish candle that gives the buy signal. We place the stop loss at the zone level with a 2-to-1 risk reward. We'll be patient until the market hits either the stop loss or the target. You see how effective the indicator is as it hit the target for the 4th time in a row. It's impressive. It rarely misses. So if you maintain a good risk reward of 2 or 3, you're almost certain to be profitable using just this indicator. You just have to follow the signals. In the end, it's actually quite easy to apply. You see that the technical indicator is giving us a sell option here. We can see the zone turning from green to blue and the baseline from green to red. And we can see that on the sell signal, the current candle is indeed bearish in red. So, you get it by now. This is the 5th time I've explained it. We'll wait for the 5-minute candle close. We sell here, put the stop loss at the top of the red zone, and let the market do its thing. 5th trade in a row, guys, and it's a winner thanks to the zero lag technical indicator. You can see here that we had a wick that almost hit the stop loss, but no, the stop loss was saved and the trade is once again a winner. First step, we're going to add the technical indicator. We're going to type it in, select this one, and there you go. It's on the chart. I use this indicator on the 1-minute time frame for gold, but you can use it on any financial market. Next, we're going to set it up the right way. It's set to 100, but we're going to change it to 50. Next, you can adjust the colors to make it more visible on the chart. Do the same thing here and confirm. You can see that this indicator will give you very precise buy and sell signals. First, remember that it's very effective when the market is trending. You can see here a downtrend. You get an excellent trade signaled right at the top for a sell. Same here, trend reversal, a great buy signal given here with a nice profit potential. On the other hand, when the market is flat, when it's not trending, the indicator is less effective. It'll give small buy signals, small sell signals, but those are the signals that are the most misleading. So avoid trading when the market is flat. Now, I'm going to give you some live examples so you can use this indicator in the best way possible. Let's let the Japanese candlesticks play out a bit. And you can see that the market just gave a buy signal following this nice bullish move. We're going to wait for the zone to turn from red to green here, and we'll also wait for the line to switch from red to green. So we'll wait for this candle to close, and we'll simply buy right there. We set the stop loss just below the previous wick, and we're aiming for a risk-reward ratio of 1.5. Here's the first trade. You can see that a few minutes later, the trade is confirmed by the market. We wait and look for a second signal from the technical indicator. As long as the indicator doesn't give a signal, we don't do anything. A trader's job is to be patient. That's 90% of the job. And we just got a sell signal right now. You can see the line changes from green to red, and the green area turns red. So we're gonna sell at the close of this first bearish candle in the red zone. Entry price is here. We set the stop loss just above these small wicks here. And like before, risk reward is 1.5 times. The second trade is placed, and we'll see if the indicator was right. Once again, it's a nice trade. The indicator hit its target. You've just made money for the second time in a row in just a few minutes. As you can see, it's a very simple logic to understand and follow. We're going to let the Japanese candlesticks play out and wait for the next trade. Just a reminder, we're on the 1-minute time frame and this is scalping on gold. The indicator just gave a buy signal. You've got the logic down now. We go from a red line to a green line and from a red zone to a green zone. So we'll buy when the first candle in the zone closes. Entry price, we set the stop loss below the previous wick and look for a risk-reward ratio of 1.5 or 1.6. And you can see that very quickly. In 3 minutes, the market hits the target, and that's a third winning trade for this indicator. Let's let the market run and wait for the next trade. We stay patient, as always. That's a skill you need to develop.
You see the market giving you a fourth trade here, this time a short trade. You can see that we had an upward move, formed a double top, and now the market is confirming this signal to the downside. Just like before, we'll only enter a short position when we get the first Japanese candlestick in the red zone. The close of the first Japanese candlestick in the red zone is right here. We set the stop loss just above the last high and aim for a risk-reward ratio of 1.5 or 1.6. The trade is placed. Let's see if the market hits our target for the fourth time in a row. And yes, the market just reached its target for the fourth consecutive time. You can see how, when there's movement in the financial markets, this technical indicator is incredibly effective. I'll let you practice with this technical indicator on a demo account. Thank you for your attention. See you next time.
First step, we're going to add the technical indicator we'll use for this scalping strategy. You can select this one. We're going to go into the settings to modify it. Here you put 11 and here you put 1.5. We can change the color to red, and in these settings you can thicken the lines so they're more visible on the chart. We can also change the symbol. For buy signals, I'll use a green circle, and for sell signals, I'll use a red circle. We can remove this, and remove this. You have the only technical indicator we'll use for this scalping strategy. So you see, we have a green zone when the market is bullish, and a red zone when the market is bearish. We have a middle line here that turns from green to red when a signal, for example, here the technical indicator gives a sell signal. We set the stop loss above the previous highs, and you see the trade offers a risk reward of 1.7. The indicator here gives us a buy signal, stop loss below the wick, and very nice profit potential. In the rest of this video, I'll explain exactly how to buy, why to buy, the signals, timing, stop loss, and how to set your targets. I'm on a 5-minute time frame on Bitcoin, and you can adapt this strategy to all financial markets. I'll let the candlesticks run on the chart, and we'll wait together for the next signal from the technical indicator to break it down and explain it. We stay patient, wait for the signal, and you see that here, the market gave a buy signal. We can see that the technical indicator was red in its zone, red in its line, and now the line is starting to turn green, and the zone is starting to turn green. When the indicator gives the signal, it's on this very, very impulsive bullish candle. We're going to buy, and the right entry timing is to wait for this candlestick to close. That gives an entry price right here. We set the stop loss below this very impulsive bullish candle because we believe if the market returns to this price level, the candle will be invalidated, and we're looking for a risk reward of 1.5. It's a nice first trade, easy to take because there was bullish momentum. We let the candlesticks run and wait for the next signal from the technical indicator. We stay patient. You know that patience is a very important quality for a trader. We can see that the indicator just gave a sell signal here on the red circle. The trend was bullish. The middle line was bullish because it's green, and you see it slowly turning red at the signal, and the green zone is starting to become a red zone. Once the technical indicator gives the signal, we look at the candlestick that triggered it, and you can see it's clearly bearish, so it's validated. We'll sell at the close of this bearish candle that's given the signal on the technical indicator. We place the stop loss at this level and aim for a risk-reward ratio of 1.5. We'll let the candlesticks play out to see if the technical indicator was right for a second time in a row. We have to be patient. You see, the technical indicator is going to give another sell signal, but we won't add to the position since there's also an opposite signal here, a buy signal. We took our sell here, we're sticking to our initial plan and being patient until the market reaches either the target or the stop loss. You can see that the market has reached its target. The technical indicator correctly detected this sell, and we were able to profit from it as patient and professional traders. We'll let the market play out while we wait for the next signal from the technical indicator. You see that here, the market is currently very bearish. All the zones are red, the line is red, and so we wait. Here, we see the market has given us a very interesting buy signal. Because the buy signal, as you see, will occur when the market breaks its small resistance here on the 5-minute chart. So it's some nice price action. Don't hesitate to do a thorough technical analysis when the signal is given to see if it's consistent with the current market structure. You shouldn't blindly follow the indicator. You need to add technical analysis and price action to this technical indicator to increase your chances of success. As usual, we wait for the close of the candle that gives the signal before we buy or sell. Here, we're going to buy, as you've probably guessed, and the entry point is precisely here. We put the stop loss under the low here and look for a risk-reward ratio of 1.5. First step, we're going to add the technical indicator we'll use for this scalping strategy. You select this one. We go into the settings. You can delete this and delete that. Is a technical indicator that will give you buy or sell signals. When the market is below the gray line, it's bearish. And when the market is above this gray line, it's in an uptrend. When there are trend changes, the market will break the gray line to move above it. And in this trading strategy, we're going to trade those trend changes. I'm on the gold chart on a 5-minute time frame. We'll wait for the next signal from the indicator and see if we trade it together. We can see a buy signal given by the indicator right here. The first rule to follow, when the indicator gives its buy signal, the candle giving that signal must be bullish. This candle must be in the same direction as the signal. Secondly, the market must break the gray line. You set the stop loss here, just below the previous market lows, because we assume if it returns to this zone, it might go lower. I'll let the candlesticks play out to see if the indicator was right to give us this buy signal. I'll let the candles run to wait for the next signal, and I'll take this chance to ask you to subscribe if you like simple, effective strategies. Here you have a sell signal from the technical indicator. We can see that we had this uptrend during our buy trade. The market was above the gray line, and we see it's now breaking below it, potentially staying there. The signal is a sell, the candle is bearish, so the rule is followed. We wait for the signal candle to close before selling, which gives us an entry price here. Set the stop loss just above this impulse candle, because if the market returns above it, it's a trend continuation pattern, so it might keep rising. Then, patience, we wait for either the target or the stop loss to be hit. Here, once again, the target has just been reached. We can see a buy signal given by the technical indicator. Once again, you have the break of the gray line. You have a trend reversal, a break of the bearish trend line right here. The signal's bullish and the signal candle's indeed bullish. So all the ingredients are there to take this trade with confidence. The buy price is at the close of the 5-minute signal candle. The stop loss in this zone, just below the wicks, and we look for a 2 times risk reward. Patience until the target or the stop loss. You can see that the target was hit very quickly in a straight line. We wait for the next signal, and we can see that very quickly the indicator gives us a sell signal with this nice impulsive bearish candle. Once again, you have the break of the gray line. You have a red candle for a sell signal, and you have a very nice bearish price action with a nice bearish momentum. So that gives us a sell at the close of this 5-minute candle. We let the candlesticks play out and wait for the target, reached very quickly for a 4th consecutive time.